Hello, we are in Sinaia at the second edition of IAR, the International Insurance Reinsurance Forum. Today speaking with Mr. Eugene GURENKO, lead insurance specialist in the World Bank. Welcome to Sinaia again. You were here for so many times already, and in fact you are one of the global insurance specialist who was closer to the Romanian market for many years during the times that the mandatory household insurance schemes was set and designed. How would you appreciate the current status of this scheme and its activity and its perspectives here in Romania?
Well, first of all, I would like to thank you, Daniela, for inviting me to speak at the FIAR. It's always a great pleasure to be here. I feel like at home among friends, so it's true. I've been going to events from the time immemorial, and it's probably my 15th or 16th event, but I lost count and have to count on you as the data experts, so to tell him what exactly was the time. Now, with regard to your question, I think PAID has come a long way since it's been established. I must say that initially when the program was just set up, I personally as an expert was not very pleased with the technical characteristics of the program. I felt that the premium was inadequate, deductible was not there, and the level of enforcement was not of a kind we desired. So, but after a while, due to enormous efforts by the PAID staff and the insurance industry, so PAID actually came a long way, and I would say today it's one of the best run global programs. And of course, I must say that PAID was lucky because at the time of the launch, it hit the soft reinsurance cycle and rolled with it for a while, and therefore had no difficulty whatsoever placing its reinsurance programs globally, despite the fact that the rates, in our view, were actuarially inadequate and the deductible was non-existent. But you know, as I say, you don't judge the victors, and in this case, we clearly have a one. The PAID program in Romania is a winner, and it's a winner to the benefit of the Romanian homeowners, which received very affordable coverage of the highest credit quality.
Do you think that there are still some aspects that could be improved in the company's functioning, or maybe in the regulatory field, that would put the company in the position to better operate?
Well, clearly, there's always something to be done. I think in case of PAID, we still have the question of claim settlement capability that remains unsettled. So, as we know, the success of these compulsory schemes when it comes to mass disasters, large-scale disasters, is always driven not only by the ability to pay claims, but also by how fast and efficient they can settle many claims that arise from large-scale events. So, the recent earthquakes in New Zealand, Christchurch, for instance, show that even established, much more mature schemes like EQC had difficulty managing such massive events, and as a result suffered a major reputational blow because it took them years to settle claims. So I certainly hope that PAID will learn from this lesson and accelerate its efforts to put in place a well-functioning claims management system which can in fact settle losses from a major catastrophic event like a repeat of Vrancea, for instance, earthquake in Bucharest, and that involves tens of thousands of claims. So far the claims management capability is on the weak side, but I certainly hope that this gap will be plugged in the very near future. So besides the claims part, I would say that the question of penetration still remains an issue. So PAID, of course, has come a long way. We're now at 1.7 million policies, and but it's still only 20% of the population. This is a good number for for a country like Romania, where enforcement is difficult, particularly in light of the fact that the law doesn't have well spelled out enforcement mechanisms. But nevertheless, the pool currently is stuck at 1.7 million. The penetration hasn't been growing, and one should really think how to move it from that plateau up, so that we can see by it becoming more, I would say, all-inclusive for the Romanian public. Now, with regard to the regulatory issues that you raised, I certainly think there is a scope for improvement there as well. There are several issues that immediately come to mind. One, of course, is the question of internal risk model. I understand discussions are ongoing because the standard formula used in the Solvency II approach for calculating the risk-based capital requirement is not very applicable to specialty catastrophe risk writer like PAID. So obviously, internal risk model would be a major step forward in that sense in improving the quality of risk management in the company. Also think that it is important that the regulator carefully considers any potential changes in the scope of coverage and takes all the necessary steps to ensure that if such are introduced, for instance, expansion of coverage to include an extra peril like wind. So that's done with good care and does not affect the financial viability of the program, because by including wind, we obviously will be dealing with, we will be including a more frequent peril. This is likely to have a major erosive impact on the company's PAID's capital, and that, of course, needs to be either compensated by increasing the tariff or introducing a deductible or reducing the scope of coverage somewhere else, if PAID were to at least remain at the same level of financial performance. So otherwise it becomes an unfunded mandate and only will result in eroding of the capital. Of course, adding an extra peril, which is more frequent by nature, has also positive sides. Something like having such a peril in the cover will probably attract additional customers that do not see themselves exposed to earthquakes or flood. Wind is more, I would say, less predictable peril and cannot be mapped in advance. So that might have a desirable effect, but again, that is yet to be seen whether PAID will manage to acquire more customers, and if it does, more likely this increase in penetration will come from better enforcement mechanism rather than just pure, I would say, evolution or expansion of the program. So all in all, I would say that additional perils should come. Adding additional perils is a tricky step to do, and it must be carefully thought through not to destroy what has been created so far.
Speaking about the penetration, the still low penetration, in your experience, you have seen so many such arrangements all around the world. What would be the measures that could encourage people to buy this policy? So,
well, to be honest, I've been, after 20 years of working on that specific subject, I came to the conclusion that the most effective way forward is to make these programs enforceable. So if the law, like in Turkey, is better enforced, then meaning that there are concrete checkpoints for enforcement, that would greatly contribute to increasing penetration. Currently, the law that we have in Romania is not really a compulsory law because there are no effective checkpoints. In fact, there are no checkpoints whatsoever. Even though municipalities are responsible for enforcing the law, so far, as I understand, not a single fine has been introduced since the inception of the program in 2010. But I also think that there is merit in increasing public awareness. There is merit in going out to consumers, to civil society, to schools, and trying to bring the message to sort of to send the message to the broadest population about the real benefits of paying. A good example is TCAP. So TCAP, for instance, sponsors national competition among universities for the best seismically designed building. TCAP provides special city prizes to those municipalities that achieve the best penetration results. TCAP goes to schools, and there's a chapter in school books on earthquake insurance and earthquake resilience. This is the kind of simple things that paying can, of course, do, and that will go a long way towards increasing the penetration, raising the public awareness, and quite frankly, buying better will or trust of the public. Now, in addition to being in step with technology and digitalization trends of the industry, I must say that there might be something that we can try to increase penetration using new emerging technologies. For instance, recently I have heard that the public, the users of Facebook, 60% of them expressed interest in buying insurance from Facebook because they believe in it, and because they believe Facebook is a good brand. So there's no reason why Payit cannot try to use one of those social platforms to at least spread the message or partner up with these platforms to sort of increase insurance penetration, or at least increase awareness of its product. So there are many things one can do using new technologies, social media campaigns, like Facebook. So one has to think outside the box to push the penetration up, and in that regard, I think this is just the beginning, and I certainly hope that Payit will take full advantage of this newly opening technological opportunities to reach out to consumers.
Lots of possibilities here. Leaving a little bit aside the Romanian case, in fact, globally speaking, the protection gap is still very large. And there were some major NatCat events which didn't trigger major losses in the industry just because they have occurred in areas where the penetration was so low that the insurance industry didn't felt the effects. What is the World Bank approach on this issue at the global level? What do you think that would be the steps that, I don't know, humanity should follow to improve this thing?
Yeah, this is a very important question. I think fundamentally to see, and it is true, of course, that catastrophe insurance premium still remains a very small share in the portfolio of non-life insurers globally. I would say that it has been remaining relatively flat over the last 10 years, and one does not see any growth in that regard whatsoever. And it's surprising because NatCat has one of the lowest penetrations as a business line, as an insurance business line, among the customers, among the public, and yet it's not growing. The question is why. And here we run into a structural problem. A problem of government compensation policies, disaster compensation policies, which so far have not changed much since over the last 50 years. So it is still very common, if not universal practice, for governments to provide post-disaster relief ad hoc, often penalizing those who hold insurance policies. In fact, those who are insured, in the case of Serbia, received much less from the government. In fact, they received nothing than those who were not insured. So this type of policies, ill-conceived policies, I might say, so they're detrimental to the development of the markets, of catastrophe insurance markets, because they create false expectations and essentially demotivate consumers to buy catastrophe insurance products from the private players. Going forward, there got to be a fundamental change in how governments compensate for natural disasters. In the absence of a major shift in their post-disaster compensation policies, I do not see how penetration for cat risk products will increase in any short-term future.
Yeah, this will remain a problem for some time ahead. Well, in this case, I think that I have a last question. Do you think that solution is, I don't know, micro insurance, inclusive insurance, all these new concepts, well, new, not so new in fact, but there are more discussions about in this period, can be a solution to increase coverage? Is really cat protection not bought in many regions because of the price, because people can afford it?
Yeah, to be honest, I don't think it's a matter of price. I can tell you that under one of my insurance pilot programs in one of the countries in the Balkans, in the Western Balkans, we designed and retail a product for earthquake damage for 80 cents. The product provides 3,000 limit of insurance protection. There's no demand for this product. Simply not. So it just tells that even 80 cents is 80 cents too much, even though the product is perfect terms and conditions, it's very easy to obtain, no questions asked. It's a good product. We spend a lot of time and effort consulting with consumers and insurance companies how to make it affordable, high quality product. There's no demand for it. So there is something like a fundamental behavioral failure when it comes to buying catastrophe insurance. The public simply doesn't see it as a benefit unless this catastrophe insurance products are bundled with something that the public values more. This could be loans, this could be goods and services, or this could be simply a legal obligation. So, but counting on a pure kind of market-driven positive response on the demand side when it comes to products that cover relatively rare events is not a good strategy, and it's been proven over and over in many countries where we work that leaving the fate of the insurance penetration to the market is simply not a wise strategy. It doesn't get you far.
Okay, so then I understand that a lot of out-of-the-box thinking would be required to make this product more attractive. And on the other hand, maybe we as humans and owners of properties should be a little bit less optimistic with regard to the catastrophe occurs.
Clearly, I mean, in every market where we see high penetration, like the Czech Republic, for instance, you raised today, or Poland, the countries of Central Eastern Europe, they have 70% penetration rate for flood, for instance. Not because they're so much more risk averse than people in Romania, for instance, but because the banks require flood protection as part of their mortgage coverage. And in fact, banks require Flexa, but in those countries, flood was always traditionally embedded in the Flexa. It was simply not possible to separate flood from fire. And as a result, everyone who had to go to get a mortgage had to get a fire policy, and as opposed to countries of the Balkans where you flood or quake just endorsements that could be simply rejected because they cost more. Consumers in those countries simply didn't have this option, so they ended up insured against flood. Everyone had a mortgage or a house which was financed, so they ended up fully insured against natural perils. That's why the results look so good.
Well, this is still a good news that it seems to me that solutions are pretty much closer than one might believe. Thank you very much, Mr. Gurenko, and I hope we will see again and talk again about these things, maybe considering better results or a better situation in the future. Thank you very much.
It's a pleasure to be here.